What if I told you the best performing stock of the 21st century wasn't Apple, Amazon, or Tesla? It wasn't some high-tech innovator or a billion-dollar startup. It was an energy drink company. And chances are, you missed it. Here's how Monster Beverage quietly turned $1,000 into nearly $500,000, and how you could spot the next monster before it's too late. So, how did a company selling neon-colored sugar water outperform some of the most powerful tech giants on Earth? And, more importantly, could you spot the next monster before it takes off? Let's break down this insane success story and what it reveals about finding explosive stocks. The early days of Monster. A penny stock with no bite. In the early 1990s, Monster wasn't called Monster. It was known as Hansen's Natural, a struggling beverage company desperately trying to survive. They sold fruit juices and natural sodas, but their sales were, let's just say, uninspiring. The stock was basically a penny stock, trading for under $1. Investors barely noticed it. The company was floundering, burning cash, and going nowhere fast. But in 2002, they decided to try something bold. They launched Monster Energy. Energy drinks weren't new at the time. Red Bull was already dominating the market. But Monster had a different strategy. While Red Bull went premium, Monster went wild. Massive cans, aggressive branding, and bold flavors aimed squarely at young men, gamers, extreme sports enthusiasts, and anyone who wanted to feel like they were bouncing off the walls. It wasn't just a drink, it was a culture. Monster didn't pour money into traditional advertising. Instead, they invested heavily in grassroots marketing, sponsoring BMX riders, skateboarders, UFC fighters, the adrenaline-fueled crowd who embodied the Monster lifestyle. It was edgy, rebellious, and it worked. The brand exploded. Monster became the drink of choice for anyone who wanted to feel powerful, hyped up, and ready to take on the world. Sales soared, and so did the stock. By 2010, Monster had transformed from a penny stock into a powerhouse. It had quietly outpaced the tech boom, the crypto craze, and nearly every hot trend on Wall Street. But here's what really made Monster a monster: consistency. While competitors chased the latest fads, Monster stayed laser-focused on one thing: energy drinks. They didn't waste money launching dozens of unrelated products. They doubled down on what worked. Monster kept releasing new flavors, limited editions, and regional exclusives to keep the hype alive. They never stopped pushing deeper into extreme sports, music festivals, and viral marketing. And their margins? Insane. A Monster drink costs less than $1 to produce, but sells for $3 to $4. That's the kind of profit margin you dream about. But Monster's biggest win wasn't just marketing, it was distribution. Instead of fighting Red Bull for premium shelf space, Monster partnered with Coca-Cola. In 2015, Coke took a major stake in Monster and handled global distribution. Suddenly, Monster had access to millions of stores worldwide without lifting a finger. That partnership supercharged their growth, turning Monster into a global giant practically overnight. Here's the interesting part. Monster didn't look like a winning company for most of its rise. It wasn't trendy like tech stocks. It wasn't innovating with flashy new products. It just kept doubling down on a single niche and executing perfectly. This is where most investors get it wrong. They chase hype, piling into companies with flashy announcements, viral buzz, or trendy CEOs. Meanwhile, real winners often look boring. Monster quietly crushed its competitors because it ignored distractions and stayed obsessed with its core strategy. The numbers don't lie. From 2002 to 2022, Monster's stock returned over 70,000%. For perspective, if you had invested $10,000 in Monster back in 2002, you'd be sitting on $7 million today. That's the kind of return that makes hedge fund managers jealous. Yet the signs were there. Monster's revenue growth was explosive. Their profit margins kept expanding, and they dominated their niche with ruthless precision. Smart investors knew the metrics didn't lie, and that's exactly the type of data platforms like Seeking Alpha and EchoTrade specialize in tracking. Here's the crazy part. Monster wasn't exactly a secret. The signs were there for anyone paying attention. Massive revenue growth, expanding margins, and a fiercely loyal customer base. Yet most investors ignored it. Why? Because Monster didn't fit the mold of a serious investment. It wasn't some Silicon Valley tech darling. It wasn't an industry disruptor. It was an energy drink company with edgy branding. And most investors laughed it off. But smart investors, the ones who focus on numbers, growth rates, and margins, they saw what others missed. That's why platforms like Seeking Alpha and EchoTrade are powerful. They focus on hard data and proven strategies, helping investors spot hidden gems like Monster before they take off. So, could there be another monster? Absolutely. The market is full of potential monsters. Small, overlooked companies quietly dominating their niche. The key is finding businesses with explosive revenue growth, expanding profit margins, a loyal customer base, and most importantly, a clear competitive edge. This is where services like AlphaPix shine. They specialize in finding under-the-radar stocks with massive growth potential before they hit the mainstream. Imagine stumbling onto the next monster at $1 a share. That's the kind of game-changing investment that builds real wealth. But here's the catch. Spotting these winners isn't easy. Monster's success wasn't just luck. It was years of perfect execution, smart marketing, and ruthless focus. Most companies won't pull that off. That's why you need strategies that combine data with insights. Investing platforms like Seeking Alpha and Echo Trade can help you filter out the noise, and AlphaPix curates standout stock ideas based on proven metrics. The takeaway? Monster's story isn't just about missing out on a wild stock. It's about learning how to spot these winners early before they explode. So next time you see a scrappy little company quietly dominating its space, pay attention, because that could be your next monster. Want to know how top investors spot stocks like this before they blow up? Check the link in the pinned comment. You don't want to miss it. See you in the next video, and please subscribe if you enjoyed this one.